Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, March 22nd, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index having a counter trend bounce of 0.3% last week to lower cycle highs, as it continues to signal bearish on a 90-day trend duration. You have the euro versus the US dollar correcting another minus 0.4% last week, but was able to hold trend support as it continues to signal bullish on a 90-day trend duration. You have the yen versus the US dollar appreciate 0.1% last week as it continues to signal bearish on a 90-day trend duration. You have the British pound versus the US dollar correcting minus 0.4% last week as it continues to signal bullish on a 90-day trend duration. And then you have the Canadian dollar down minus 0.2% versus the US dollar last week as it continues to signal bullish on a 90-day trend duration. And so what you're seeing here is the safety currencies, if you will, in the Japanese yen and the Swiss franc start to diverge bearishly versus more cyclical currencies such as the Canadian dollar. Moving along here, taking a look at rates, the U.S. 10-year yield ramped up another 10 basis points last week to a new cycle high now of 1.72%. And so alongside rates up and the dollar up, you did have a mild correction here in commodities with the CRB index correcting minus 2.6% to now plus 13.4% in the last 3 months. Breaking that down further, you have WTI oil also corrected in hand, minus 6.4% last week to now plus 24.3% in the last 3 months. And you have copper correcting minus 0.7% last week to now plus 13.1% in the last 3 months alone. However, on the other side of that, you did have certain sectors continue their inflation higher. If you take a look at something in the agricultural sector and in the meats, you had corn inflate another 3.5% last week to now plus 27% in the last 3 months, and hogs, those inflated another 1.6% last week to now plus 24.5% in the last 3 months alone. Moving across asset allocations here and touching on global equities. Just last week, the main takeaway here would just be the divergence between Chinese stocks, which were down another minus 1.4% to now minus 7.9% last month, and German stocks, which were up another 0.8% to now plus 4.5% in the last 3 months. And so just touching on volatility, lastly, broad U.S. equity volatility does continue to break down, with front month going out at 20.95 on Friday, with now medium term downside to about that 18 handle. And so our expectation here within this counter trend bounce that you're seeing in bond yields, the upward bias in the broader market to continue as we come into month and quarter end. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head about there.